Hi, Chad Burton here. I'm with Brad Barkin from Embroker, and we're going to talk today about Embroker and the role they have within the legal profession. So, Brad, thanks for joining me.
Yeah, happy to be here. Thanks for getting it scheduled.
Hey, no problem. Let's just get started. Could you tell everybody about yourself and your background?
Sure. So my background is I've been in the insurance industry for since 2005. It's been a long time. Traditionally, I worked with larger accounting firms and law firms. Uh, Top 100 accounting firms, say law firms with over 50 attorneys on the average, helping them with their legal malpractice insurance. I did that for a long time with a great company until that company exited. And at that time, I realized that the insurance piece was something that my clients, generally speaking, like talking to me about, but generally speaking, hated insurance. It was a pretty important piece of their
Fair.
practice. Yeah, and I also realized I was totally devoid of technology. So with that, I kind of started exploring other options and found myself a great home about 4.5 years ago at Embroker.
Cool. I like how you're nice. When the company exited, it's very nice. So, tell us about Embroker. Couple things. One, obviously, the company itself, but to your left, there's a cute little dog, and I feel like we need to hear about that as well, because I'm assuming people are interested in what that's about.
Yeah, we get asked that question about all the time about the dog. That is. So
Yeah.
Embroker, the company, we are a San Francisco-based company. We consider ourselves a technology company first that's operating in the insurance space. So when we think about applying technology to insurance, the reason that we exist is because insurance, as you probably know, is a very important part of the economic system. It's probably the biggest industry in the world, one of the most necessary pieces to make the economy function. And we're big believers that's an important piece. We're also big believers that in buying it in its current state is brutal. I think traditional insurance brokers, they're good people, but oftentimes the process and the onus that's put on the buyer is way too much. The insurance terms are incredibly confusing, and it just takes way too long. So that's kind of why we exist. The reason we exist is to make the purchasing of business insurance much faster. People that are there for you and to be friendly to talk about it, and then a use of technology that makes the purchasing of it far more efficient. That dog that you see in the corner, like I said, is our number one question. That's Shotwell. So Shotwell is our mascot. Our founder and CEO Matt Miller is, and across the company, we're all huge animal lovers, and the what Shotwell kind of reminds us of is just being scrappy and just being bullish on trying to get the job done, because we are a newer company on the street, but also having the kind of mentality that a dog will have in terms of being incredibly friendly, loyal, and to be there for you. So that is the mantra that we try to hold ourselves to. So that's Shotwell.
Nice. Very nice. So you mentioned, okay, business insurance. That means a lot. So from a law firm perspective, what are you covering for law firms from a business insurance perspective?
Yeah, and I'll take a step back too. So the company and broker, I think when we first started out, we tried to be all things to all people, and we realized really quickly that we could, by segmenting this into certain industry niches, we could be all that much more effective. We still do a wide variety of companies from all walks of life. But we have two specific industry niches that we really focus on. The first is technology companies. We do a lot of technology companies, startups and the like across the country. That's our biggest vertical. The second biggest vertical is law firms. So for law firms, the leading line of coverage that they tend to think about is malpractice insurance. It is when you start a law firm, that is probably your one of, if not the first purchase that many lawyers will make, is to get malpractice insurance in place. And then we can round it out with any other lines of insurance that a law firm needs. Cyber liability is a big one. Employment practices, as they get bigger, is another big one. Their property insurance, et cetera, workers' comp. But the reason we start with malpractice is because the buying process, I think, is bad right now. So it's really expensive. Lawyers, believe it or not, don't like spending too much money on their insurance. It takes way too much time. So if you see what happens with law firms, they get this PDF application sent to them. Somebody has to sit there and fill that out when they could be working with their clients or servicing things or doing anything else other than applying for something. We're going to have to spend thousands of dollars on a product that they probably won't use. So why does it have to be that confusing? Probably shouldn't. It's a product that seemed totally devoid of technology and something we were ready to improve upon.
Cool. So you said yeah, and I agree. The process of going through and applying it takes forever. So how is your process different?
Yeah. So there's a lot of confusion around insurance, and it doesn't have to be that complex, right? So for lawyers, when you think about it, I think brokers tend to, or intermediaries, whomever you're working with, it can overcomplicate things. It really doesn't have to be that bad. It's important, no doubt about it, and we want to provide good coverage, but it doesn't have to be that hard. So when you think about the insurance, the things that really matter for most law firms are where you're located. So that's a rating factor. How many attorneys are there when they were hired, because they've got prior act states that we want to cover, and then the areas of practice, and then risk management techniques. So we're coming at it at a little bit of a different angle, and instead of the old process where you're filling out an application, sending it to a broker who sends it to somebody else, who sends it to the insurance company, and all of them are typing in information, we've just streamlined the process. So we're still collecting all the pertinent information, but we're using a rating algorithm to cut down on both time and cost in order to pass that along to the lawyer. So what it looks like for us is, rather than sitting down and filling out that PDF over and over the same stuff every single year, you sit down, you log into your Embroker.com account. It's a much more modern way of doing it. You put in your information and you get a quote. Qualifying firms get a quote. 75% of the firms that apply with us get a quote immediately, and then you can change your limits, change your deductible, and just buy it. If you want to talk to somebody, we're available.
Got it. So you said less time, and so that, yeah, if you're getting it immediately, like how long does it typically take to fill out the application?
Yeah, great question. So new firms, it's usually under 10 minutes to fill out the application. Okay. Our renewing firms, current clients, the information's there. So unless anything's changed, 5 minutes, maybe 5 minutes.
So not awful.
Pretty good.
That's a little shorter than the hours and hours it usually takes.
Right, and not to mention the wait time. So one of the other things that I think is frustrating for law firms is that they might want to know, well, what if I increase my limits, or what if I decrease my limits because money's a little bit tight right now? What if I increase or decrease my deductible? How does it change the pricing? And it's there's friction there in the current process, because they go back to their broker, and their broker says, okay, let me check, and then it's a few days, and then they come back, and then you got to ask people in the firm, what do you think about this? That's just annoying. It shouldn't be. So for us, with our users, if they want to know, we try to be super transparent about it. So the underwriting is done when they get a quote. They can change the limit, change the deductible. There's a few different features on there that can kind of offset risk for them, like first dollar defense, and they just see the price. Pricing's live. So get to the price you like. Like I said, we're transparent about it. If it works for you, then great. You can purchase it and you're covered.
Got it. So you mentioned earlier, I assume this all ties together, that you're leveraging tech and an algorithm, and I assume aggregating all this different information. I assume, so this is more of a tech, have you always had this tech-driven product for malpractice?
No, so this is new. And when we started this company, and moreover, when we started this practice for law firms, this was the goal. So we struck a few good partnerships. We're the preferred broker for Clio, which is nice, and we work with those folks. But we always were trying to find an application for technology. About a year and a half ago, we did a deal with Everest Insurance. So Everest Insurance is the primary, kind of the primary digital partner for us in this, and it was, like I said, insurance is antiquated, right? So finding an insurance company that was willing to insure lawyers and take a digital approach to it and shake up what they had been doing was not easy. And we also weren't just going to accept any insurance company, right? So we wanted to partner that was going to provide really good coverage. Everest is an A+ rated insurance company. Most people don't know that. They're not out there sponsoring golf tournaments or commercials, but A+ rated insurance company, part of the S&P 500, and they really kind of understood what we were trying to achieve. So we were fortunate enough to have them as a partner. Struck that deal about 1.5 years ago, and have kind of been off to the races since.
So when did you roll out the digital malpractice product?
Yeah, we rolled it out the digital piece came right around October of 2019. So prior to that, it was we were underwriting with them, and doing some test cases, and then we went fully digital, right around October.
Okay, so one thing you just had mentioned, you're a partner or preferred broker for Clio. Tell me about that. What does that mean?
Yeah, so effectively what it means right now is that we, unlike traditional insurance brokers and policy forms that were designed years and years ago, we're firm believers that if a company is using technology to help run their law firm, they're probably a better run firm, as opposed to the law firm that just uses Microsoft Excel to run their books, and the technology that's available through Clio, my case, and some of the others do a really nice job. And so with Clio in current state, basically what that means is that the Clio users get a little bit of a discount on, it's rated a little more favorably, let's say, as opposed to the word discount, but they get a little more of a favorable rating because of their investment in technology. So that's the way it sits currently.
Got it. Now, is there a tech integration at all, or is it just the use aspect of it?
That is going to be a fun thing to talk about for 2021. So I won't go there right now.
Okay. All right. Because
yes.
that could be really interesting, especially because you have access to kind of their actual use of it potentially. I know you said 2021, and it is 2021, so I feel like I can, think about this, but you could because I mean, just because you sign up for Clio, Rocket Matter, my case, whatever, just because you're a user doesn't mean that you're using it well or to its full potential. So if I'm just signing up as a Clio user, it doesn't mean I'm not necessarily using the tech does that matter how much people are using it?
We haven't gone down that road yet. So, there's a lot, I think there's a lot of applications for being able to gauge the risk profile of a firm, in partnering with some of these technology companies who are on the cusp of legal tech. I think will help us do that. So we're not there yet, but trust me when I tell you that that's very much something that we're thinking about. And there's applications of trying to better evaluate risk all over the place, and this is hopefully how we can try to do it and be smarter about it and reward well-run law firms in exchange for them doing the right things.
Right, and I'm just thinking about applications filling out where they would it would ask the percentage of practice areas, right? And so most firms are going to guess and ballpark it and be like, oh, I'm 25% corporate, 15% work, just making, not quite making stuff up, but really guessing. But if you have a really cool integration with the practice management software, you'll be able to extract that data without the user even have to thinking about it. Just be able to say, oh, you can break it down by matter type just because, or practice area, just based on the tech itself, if it's being set up properly.
Yeah, Chad, you could be our ambassador for making this happen because
right.
All the things we've already thought about. Yeah, you're right.
Right, you're all right. We're already there, right? Yeah.
Yeah. So we're, but you're exactly right. I mean, there's a lot of really interesting things we can do, and then moreover, to not make it so confusing, if we had, depending on the quality of the data, and again, the software companies are very conscious of privacy and what they want to share for good reason. But if we got down that road at a certain point, maybe insurance doesn't have to be so damn confusing, and you just buy a policy for your law firm, right? So it just covers everything, like everything you need, and you could just add and subtract on it. But for now, we have it as legal malpractice insurance, and then they can add on the property and their cyber, et cetera, et cetera. But yes, those are avenues we can explore, and we will explore. We're excited about that.
Fun. That sounds fun.
Yeah.
That's a whole different. Now we're talking like, interested. Combining the algorithm of shortening the process with the ability to extract real firm data for analyzing. It would just encourage the firms to use it better, because now you're paying less on insurance. That could be a lot of fun.
Correct. And we have some other interesting things on the roadmap. So policyholders or folks who come to us will, I think, in short order, have access to really excellent risk management tools that'll be free to them. So if you have questions on your engagement letters, or how to resign from a firm, or pick a topic, we'll give them access to that, and we'll soon be partnering with a very well-known provider that'll be kind of a new entry into legal malpractice that'll help us do that. So we're always trying to again, the pricing of insurance and what you get for it is just on its head right now, right? Like the fact that somebody has to spend so much time and get so little out of their insurance provider, other than a policy form, and hopefully it's there when they have a claim, is backwards. So what we're really trying to do is put the onus on us Embroker as the provider to do the work for them, not make it so difficult, and then let them just trying to squeeze as much out of that lemon as we can, kind of make that lawyer, the law firm, the beneficiary of that. So the more value we can squeeze out of it, the better.
So earlier, and you've mentioned a couple of times about being more cost effective and cheaper insurance. So let's push on that a little bit, just because it's easy to say cheaper, but then everybody's quotes are going to be different. So how is it actually like? I don't know what's the best way to describe how it is cheaper.
Right. Like how do we say that, as opposed to like your Geico commercial and says like you could save 20% on your insurance? Like how
right.
Actually...
Well, my 8-year-old was just asking me about what car insurance, and he's like, do you have Geico? Because it's and it was rattling off that all the quotes, and it's like X% cheaper, and it's like so 8-year-olds get it, but how does that work in this context?
Yeah. So it's really easy for us to go out and yell into the wind that we're going to save a company X% and hope that people come to us. One of the things that I feel good about when I say that is that we have a fundamental reason why we feel confident that we're going to do that. Now, it's not going to happen every single time. We're going to run into firms that have a screaming good deal, or they're with a very low cost provider, and that's great. And we'll tell them that hey, you got a good deal, and go for it. Maybe we're not the right fit, but by and large, we are probably going to be saving firms money with an A+ rated carrier, and there's a reason for that. So if you think about insurance, the simplest example I can get is that most say 50% of the dollar that you spend in your insurance policy is going to go towards paying claims, and that's not going to change. That's good, right? You want to be able to pay for claims. The rest of that money, say 50% or so, give or take, is spent on other things like administrative overhead and processes and distribution and real estate, all kinds of things, and sponsoring golf tournaments, like all kinds of things like that that you are paying for. And so with us, we felt like we could really cut out a lot of the fat of the distribution cost and the administrative cost. And the way that we do that is that instead of going through multiple different channels to receive your insurance policy and multiple people touching it, we could accomplish it through a rating algorithm and having people go in and apply it digitally. So the old way, and there's a company that operates exactly like this, is that as soon as in the old way, you send in the PDF, that PDF goes to a broker. That broker sends it to an intermediary who sends it to the insurance company. That insurance company has an office in India where it's typing in some information to enter it, and it takes a data clear. And then there's the legal underwriters are sitting there, and then they're retyping it into another rating algorithm, which again, it's fraught for error. And if they have enough information, great, they send it to you. And if they don't, then they go back to questions. That's nonsense. So what we're doing is like the lawyer enters in the information hits a rating algorithm, the rating algorithm gets you a quote right now. and that tends to work pretty well. It cuts down on errors. It uses technology so we can harness it a little bit more efficiently, and there's greater transparency in the whole process. So, anyways, by cutting out a lot of those processes and distribution costs, we are very easily able to, like I said, be transparent with the pricing, be quick on the pricing, be quick on the policy, and just give it to you right now.
Got it. Makes sense. So one last thing to cover here, because we're recording this in January 2021. History is surrounding us in lots of less than great ways right now, with our government almost being overthrown, things like that. Normal January events.
Right.
But we are still in the middle of our pandemic, recording remote from everywhere. You launched your product in October 2019. And so I'm imagining, as you're ramping it up, you then run into this March timeframe where the world starts burning down and law firm phones are now not ringing. So people are freaking out about purchasing anything, although you're something that law firms need. So I guess, do you tell me about your pandemic scenario with launching a new product that, is just, you're coming to this market for the first time of offering, digital malpractice insurance. Like, how did that go from a pandemic perspective?
Yeah, it was wild. And I kind of gave a look back internally here about at my company about what went on through the year. Just quickly looking back at it was fascinating. So we launched it in October every single year. Clio has their big conference. So we kind of rolled it out there. We started telling people about it, kind of boots on the ground, had a ton of fun. People who were interested in it, they couldn't believe that actually, like, we could underwrite kind of on the spot and they get a policy. We, feeling great. Things going really well into, and we're growing and growing as we should. And then we kind of hit March, and I'll tell you what, getting law firms to change and get their attention on an insurance policy when most of these administrators and managing partners are trying to figure out how in the world they are going to have everybody working remote. And I'm trying to sell, we're trying to sell them insurance, and they're like, you are out of your mind. So
are you gonna pick up my mail at the office if you give me a better rate too? Like, are you gonna do that? How's that gonna work?
Right. They're like, do you understand that we've been operating on paper files for like the last 5 years or 6 years, and you're trying to sell me insurance?
Digital insurance, let
digital
alone
insurance to boot. Right. So yeah, I mean, our Q1 and Q2, we did fine, but it was fascinating because coming into kind of late summer, and it was interesting seeing in different parts of the country. But I think people really started to adapt. I actually thought we'd see a lot more law firms like struggling financially, and clearly some did, but a lot of them were way more resilient than I think they even knew they could be. And so coming out of it, it was fascinating because they said to us, like, hey, like, this actually, the fact that I can apply online, and I couldn't find my insurance policy before because I had to go dig through a drawer that's in the middle of, a high rise in LA. Like, that's terrible. The fact that you can give this to me digitally and I can do this right now, and I can, you can have my managing partner sign it for me, and this can all be done, and this is great. So that wasn't the case every single time, but by and large, like, people were very keen on that, much more comfortable doing things electronically, and much more willing to talk with somebody who was sitting in an office or in his home or her home in another part of the country. So they were very quick to adapt. And then the other thing was that I think people were really looking to cut costs. So, but not at the sacrifice of protecting their firm. So we do a lot of handholding. Like, we're really big on the technology, but when folks want to talk to us and have us explain how this works, we do it, right? So people were confident with us. They realized it's a financial product. They realized that they could save money and save time. And in kind of, like I said, late summer, early fall, it really started to pick up for us, and it's been going that well since. So that's been fun.
Nice. Well, that's good. It's always good to hear positive pandemic stories, right?
Yeah, I mean, like I
That's,
said, insurance is not the most fun thing to talk about at a cocktail party, but it's there when you need it,
but
and
just,
it's a
but
sturdy industry.
right. But just think about how much fun it's going to be extracting data from case management software to be, oh, that's fun. Yeah, that could be now
Exactly.
insurance could be amazing at that point.
Right.
So that's good. Well, good. Well, hey, Brad, I appreciate your time and really enjoyed talking to you about this. Any closing thoughts before we take off?
Um, I would just encourage people to check us out. I think that you can visit us at embroker.com. You'll talk to myself or one of my teammates who, again, we try to be super transparent on everything, whether we can help you, whether we can't. The technology is there for folks who want it. It's an incredibly easy process. Um, and you'll get good handholding from us. So I think the technology is there, but not at the expense of providing expertise, and probably at the addition of providing expertise, because it makes it easier for us to do that. So we still very much believe it's a professional service that's there to be provided, and it's a peace of mind product. So in addition to providing technology, we want you to be confident that you're there to protect your firm, and there's guidance to be had when you need it.
Very good. And we'll
So
drop
check us
all
out.
the information down in the notes. And thanks again, Brad. And thank you all for joining us.